All right, let's dive into the world of Forex trading. You might see it as this super exciting hobby or maybe even a way to earn some extra income. But here's the thing. No matter how you look at it, success starts with knowing the absolute basics. So let's get you started.
First, I just want you to get your head around the sheer scale we're talking about. That number on your screen? $5 trillion. That's not a company's net worth. That's how much money moves through the Forex market every single day. I mean, to put that in perspective, the entire US stock market trades maybe $22 billion a day. This is without a doubt the biggest financial playground on the planet.
So, with numbers that are just that mind-boggling, it really begs the question, what is actually going on here? What are people trading back and forth that adds up to $5 trillion in daily volume? To answer that, we've laid out a roadmap for you. Think of this as your personal training plan. We're going to start with the basics of this massive market. Then we'll learn the lingo you absolutely have to know. We'll talk about picking your guide, your broker. Then we'll walk through actually making a trade. And finally, we'll cover the smart habits you need for the long haul.
Okay, first up, the big picture. At its very heart, Forex, which is short for foreign exchange, is all about the dance between different countries' currencies. It's about trying to profit from the little shifts in their value against each other.
So what you're really doing is selling one currency to buy another. You know when you travel and you exchange your dollars for euros? It's kind of like that. The huge difference, though, is that you're not planning a trip to Paris. You're speculating. You're making a bet that the currency you just bought is going to go up in value compared to the one you sold.
Now, like any profession or serious hobby, Forex has its own language, its own lingo. And trust me, getting these key terms down is totally non-negotiable. This is the vocabulary you need to navigate the market and not get lost.
Okay, first thing you'll see are currency pairs, like UR/USD. The first one, the euro in this case, is called the base currency. The second one, the US dollar, is the quote. So the exchange rate you see simply tells you how many US dollars it'll cost you to buy one single euro. Simple as that.
Next up, you're always going to see two prices listed, the bid and the ask. The easiest way to remember this is that you, the trader, will always sell at the bid price and you will buy at the ask price. And you'll notice the ask is always a tiny bit higher than the bid.
And that little tiny difference between the bid and the ask price, well, that's called the spread. The best analogy is the commission you pay at that currency exchange booth in the airport. It's basically how your broker gets paid for handling the trade.
Okay, now here's where it gets really cool. You can make money no matter which direction the currency is heading. If you think the base currency is going to go up in value, you go long, which just means you buy it. But if you think it's going to go down in value, you can go short, which means you sell it. This is huge, because it means you can find opportunities in both rising and falling markets.
So how do we even measure these tiny little changes in value? We use something called pips. A pip is the smallest little unit of measurement. For most currencies, it's that fourth decimal place. These tiny little movements are exactly what traders are watching to add up their profits and losses.
All right, you're starting to speak the language. But you can't just walk into this $5 trillion arena by yourself. You need a broker. And let me tell you, choosing the right one is one of the most important decisions you are going to make.
So, here's a quick checklist for you. Number 1, make sure they are regulated by a major authority, like the NFA in the US or the FCA in the UK. Look for some experience. 10 years is a pretty solid benchmark. And of course, a professional website, clear costs, and good customer service are absolute must-haves. This is your partner in the game, so choose wisely.
And this is exactly why that checklist matters so much. As one community member on Wikipedia put it, you've got to do your research, because unfortunately, there are a lot of scams out there. Being diligent up front is your best protection. Okay, so you've done your homework, you've picked the trusted broker, you're ready to step into the market. Now let's talk about what you need to do before you actually click that buy or sell button. Generally speaking, traders use three main types of analysis. Technical analysis is all about studying charts and historical data, looking for patterns. Fundamental analysis is about looking at the real-world economy, things like a country's GDP or its employment numbers. And then there's sentiment analysis, which is kind of like taking the market's temperature to see if it's optimistic or pessimistic. The best traders, they usually use a mix of all three.
So once you've done your analysis, it's time to place an order. A market order is simple. It gets you in the trade right now at whatever the current price is. A limit order is smarter.
It lets you tell your broker, hey, only buy or sell for me if the price hits this specific target. And a stop order is your safety net. It's crucial for automatically getting you out of a trade if the price starts moving against you.
You see, making one trade is just a single moment in time. But long-term success? That's built on discipline and really smart habits. This isn't about winning one battle. It's about having the wisdom to stay in the game for the long journey ahead.
And here it is. This is probably the single most important rule in all of trading. Never, and I mean never, risk more than 2% of your trading account on any single trade. Sticking to this rule means that a few bad trades in a row won't knock you out of the game. It's what keeps you playing.
So why is that 2% rule so incredibly important? Well, because of this number. The cold, hard truth is that about 90% of day traders don't find success. Now, I'm not saying that to scare you. I'm telling you this to make it crystal clear that this is a serious business that demands your respect, caution, and a rock-solid plan. So just remember, success out here has very little to do with luck. It's all about control. You have to control your emotions because the market is a roller coaster and it will test you. You have to do your research day in and day out. And most importantly, you have to develop a strategy and stick to it even when your gut is telling you to do something else.
And just like that, your basic training is complete. You've got the map, you know the language, and you understand the rules of engagement. So the only question left is, what's your first move going to be? And look, a really great first step for any beginner is to open a free demo account and just practice. Get a feel for it without risking a single penny. It's the absolute best way